And the BRICS are pushing back. And Trump doesn't like that. And that's why he's standing up for the Federal Reserve here in this case, saying you better stay in the dollar. And they're laughing. They're laughing. In my opinion, this is just going to...
You're watching Silver News Daily. Subscribe for more.
Did you know that in the midst of an economic collapse, silver could be your safest bet, not just to survive, but to thrive? Gregory Mannarino believes that the forces at play today could make silver the most undervalued and yet most explosive investment on the market. And here's the kicker. Its potential rise could catch everyone off guard. Stay with me because you won't want to miss why this shiny metal could protect your wealth and maybe even make you rich.
You're going to be faced with 100% tariffs. Look, here's my take on this right off the bat. Threats never, ever come from a position of strength. When a person or a nation threatens another nation or a person here, it's always from a position of a weakness. If someone is strong or a nation is strong, there's never a reason to threat at all. It's just kind of an understood thing. And unfortunately, what Trump has done here is reveal how weak we are. And the fact that he is in full support of the dollar, which means he's in full support of the Federal Reserve. I mean, this should not be a surprise to anyone. I know a lot of people have been duped, lied to, deceived, distracted, saying that Trump had somehow, we heard the same nonsense last time, was going to get rid of the Federal Reserve, and all that did happen was the Fed was vaulted to the pinnacle of power. The Federal Reserve clearly has an ally in the White House behind the resolute. That's something I warned would happen. I said before the selection, no matter who was selected, I said we were going to know who the real traitor was. And that would be a person who would be in the pocket of the Federal Reserve. And clearly that is what we have here, unfortunately. And the world is laughing. We cannot force the world to participate in the Federal Reserve scheme. All it does, obviously, is by threatening the world, hey, you better use the dollar here, is obviously supporting the central bank system, the Federal Reserve in this case here. And as far as I'm concerned, and I would believe most of the people that follow your work would be in the same boat, is we got to get rid of this institution. But that's not what's going on here. We're not being made we are being made the crypto capital of the world, not the constitutional money capital of the world.
Before we dive into why silver might be your ultimate financial shield, let's take a hard look at the storm brewing around us. We're living through one of the most turbulent economic times in modern history. Inflation is eating away at the purchasing power of every dollar in your pocket. Interest rates are climbing higher than we've seen in decades, and the global financial system feels more fragile than ever. Let's talk about the Federal Reserve, for example. After years of pumping the economy with cheap money, they're now grappling with a debt market on the edge of chaos. Every time the Fed signals hesitation or slowdowns in rate cuts, it causes ripples. No, shockwaves across global markets. This has left many traditional safe havens like bonds looking less appealing than ever. And don't even get me started on the stock market, which seems propped up on a tower of hope rather than fundamentals. But there's one asset that has stood quietly in the background, resilient and ready: silver. Silver isn't just a shiny metal. It's a hedge against the instability of fiat currencies, and it has a proven track record as a store of value. The last time we saw turmoil of this magnitude, silver prices skyrocketed as people sought refuge in tangible assets. But that's not all. There's a reason silver stands out even more today. Unlike gold, which serves mainly as a monetary hedge, silver has a dual role in the modern economy. It's essential not only for protecting wealth, but also for driving critical industries. From the electronics powering your smartphone to the solar panels driving clean energy, silver is everywhere. Now add in the rising geopolitical tensions, Russia's conflict with Ukraine, escalating U.S.-China trade wars, and even the quiet rumblings of dissatisfaction among BRICS nations with the dollar-dominated system. These factors create the perfect storm for silver to shine. We'll explore each of these catalysts in detail, but here's what you need to keep in mind. Silver is at the center of a confluence of trends, economic, geopolitical, and technological, that are all pointing toward one thing: Its price could be on the verge of a historic breakout. So, if you're wondering whether now is the time to start paying attention to silver, the answer is an emphatic yes. But how did we even get here, and why does silver have this unique edge over other investments? Let's start breaking it all down, one critical factor at a time.
Well, it's too simple. There are only two. You know this, and I think anyone that understands economics and finance knows that there are really only two fundamental truths in economics and finance, and that comes down to have a strong economy, you have to have a strong currency. To have a strong currency, you have to have a corresponding rate of interest high enough to support the purchasing power of the currency. So what we have here, again, is collectively central banks in a race to the bottom to destroy the currency by lowering rates. Trump is a proponent of negative rates. This is what he said during his last tenure, calling the Fed boneheads for not going negative. I mean, what this is an economic wrecking ball. When you have any central bank looking to artificially suppress rates, having a politician calling for negative rates or lower rates here, all it does is it's a mechanism to destroy the economy and push the stock market higher. The gap between the economy and the markets has never been as great as it is right now. And we're going to see this go on more so until it ends. And the moment of ending here, we do not have to guess. Again, we've taken a lot of guesswork out of here by just watching the debt market, which is all I look at. I've been telling people this for 10 years. I don't care what the stock market does. I know what it's going to do based on what's happening in the debt market. If we see rates artificially suppressed as they are now, and we're supposed to be in this strong economic situation, then why do we need lower rates? I mean, we need higher rates. To fix the situation, we need the polar opposite of what we're being sold, that we need artificially suppressed rates and therefore a weaker currency. Go back again, just 20, 30 years ago when we had a much stronger currency, much higher rates. One income could support a family here, a nice car, and family dressed in nice clothes. Today, people can't get by. We just found out today, home affordability just hit a new record low. This is the mechanism, but people have no idea of what's happening to them. And this is a crime, in my view. We need real leadership. We need someone to say, listen, guys and girls, we don't need this. What central banks are doing, and now we have a president right in bed with the Fed who wants lower rates here. Wait till people see what's going to happen here. Our economy is going to free fall faster. Trump is going to come out and say, you're not cutting rates fast enough. Mark my words. I want people to save this video because they're going to hear it. They're going to hear that come out of his mouth. The Fed's not cutting rate fast enough. That's why the economy is falling, which it's all leading to destruction. And what people are going to believe, some of the people that just have no clue is, oh, Trump is right. We need lower rates. But what you won't hear out of his mouth is lower rates means loss of purchasing power. And we're also going to see a couple other things. We're going to see debts and deficits balloon more so than we have now. And that's going to be made worse for people for suffering with regard to the cost of things. If they think inflation is bad now, wait till they see where this is going here with Trump's tariffs, which are coming, with currency devaluation from the Federal Reserve. They're going to really not know what to do with themselves. And you're going to hear this. Every imaginable excuse why Trump's policies aren't working. They can't see it for themselves.
When most people think of precious metals as a hedge against uncertainty, gold is usually the first to come to mind. And while gold certainly has its place in a portfolio, silver is the underdog that might just be the better choice for this moment in history. Why? Let's break it down. First, let's talk affordability. While gold is expensive and often out of reach for average investors, silver offers a far more accessible entry point. You could buy a significant amount of silver for the cost of a single ounce of gold. This means it's not just an option for wealthy investors, it's a hedge for everyone. During an economic collapse, this affordability could be a game changer for people looking to preserve their wealth in tangible assets. But affordability isn't the only edge silver has over gold. Unlike gold, silver has a dual identity. It's both a monetary metal and an industrial powerhouse. Think about this. Silver is a critical component in the technologies we use every day. It's in your smartphone, your laptop, and even the solar panels fueling the clean energy revolution. As the world pushes harder toward renewable energy and advanced technologies, the demand for silver is skyrocketing. And here's the kicker. There's no viable substitute for silver in many of these applications. The result? a growing supply-demand imbalance that could drive prices higher. Another key factor is silver's historical performance. In times of economic instability, silver often outpaces gold in terms of price gains. Why? Because it's seen as a high beta version of gold, it reacts more dramatically to shifts in investor sentiment and economic conditions. During past economic crises, silver has demonstrated the ability to generate explosive returns. This makes it not just a hedge, but also an opportunity for significant growth. Now let's consider liquidity. Silver is traded globally with a highly liquid market that ensures you can buy or sell it with relative ease. This is critical during a collapse when the ability to quickly convert assets into cash or other essentials can make all the difference. And unlike stocks or bonds, silver doesn't carry counterparty risk. It's a physical asset you can hold in your hands, immune to defaults or systemic failures. So while gold might be the more famous sibling, silver is the versatile, undervalued, and essential metal that could outperform when it matters most. But what about the elephant in the room, the US dollar? How does its strength or weakness play into silver's potential? That's exactly what we're diving in next.
Sure. I mean, it's quite obvious. First of all, as I said, this is from a position of weakness, and that's been revealed to the world, unfortunately. There is no way that what Putin said, or the Kremlin said, was Trump's threat will more than likely cause the world to back further away from the dollar faster. And I really believe that's good. Again, this is not negotiation. A lot of people think, oh, this is Trump negotiating. You don't negotiate from a point of weakness. If you're going to reveal how weak you are, no one's going to want to negotiate with you here. The world doesn't want anything to do with the dollar anymore. They don't want anything to do with our products anymore. Unfortunately, the United States we're in a losing spot here. And I don't think this is a surprise to anyone. And what does it really come down to? It comes down to, well, you could look at this as a mismanagement of the financial system or something that's deliberate. In my case, in my situation, I think the people that follow our work, they realize that nothing is happening by accident. Everything is deliberate here. And the BRICS nations that we heard from, he also threatened Mexico. The Mexican president's like, this ain't going to fix anything. You got Canada saying they're going to retaliate. You got China saying with tariffs. You got China saying the same thing here. I mean, come on, man. This is not using tariffs as a negotiation tool from a perspective of weakness. You don't threaten. You don't threaten anyone ever, or a nation from a perspective, again, of pretending to be a feigning power. It's obviously the polar opposite. And unfortunately, the world's going to see it that way. And that means the dollar and the United States is going to fall faster from whatever position it may have now in the world, unfortunately, bro. And it's just too obvious. But this means, again, look, most people have no clue as to what's going on. A lot of people have been deceived and duped into believing that they have some kind of a savior deity brought to them in the form of a Donald Trump, which is obviously, we know that this always ends in miserably when people put their faith in the wrong place. But that's what's going on here, unfortunately. A lot of people are going to be disappointed, and we're going to suffer. We're going to be I've been saying this, forced suffering here in the United States and around the world as central banks fulfill their goal. Imagine, really, the situation we have. It's almost surreal when you have a president here trying to force the world into using central bank issued notes, in this case, the Federal Reserve. What does this do? Does it weaken the Federal Reserve, or does it make them stronger? Obviously, it makes them stronger. And that's where we're going to, I'm just going to say this right now, man. Look, there's no way that the Federal Reserve is going to be much stronger at the end of Trump's tenure this time, just as he was the last time. You remember all the nonsense, all the rhetoric? He's going to end the Fed. It's going to go away. What he did under his last tenure is vault the Fed to the pinnacle of power. And we're going to see more of that moving forward. And we just got an inkling of it now as he's trying to force the world to stay in the dollar and use the dollar. It's just going to accelerate the process of getting us out of it.
Let's turn our attention to one of the biggest forces influencing silver prices, the US dollar. For decades, the dollar has been the cornerstone of global finance, but recent trends suggest cracks are forming in its foundation. How does this tie into silver? The relationship between the dollar and silver is like a seesaw. When one goes up, the other tends to go down. And right now, the dollar's trajectory could pave the way for a silver breakout. First, let's consider the Federal Reserve's monetary policies. After years of artificially low interest rates and unprecedented money printing, the Fed is caught in a bind. On one hand, they're trying to tame inflation by raising rates. On the other, they're dealing with the massive repercussions of years of debt-fueled growth. This tightrope walk has kept the dollar strong recently, but that strength has come at a cost. Higher rates are squeezing the global economy, and many nations are turning away from the dollar, seeking alternatives to reduce their dependency. Andrew Silver. Geopolitical tensions are further eroding confidence in the dollar. Nations like Russia and China are actively reducing their holdings of U.S. Treasury bonds, diversifying into tangible assets like gold and silver. The BRICS nations, Brazil, Russia, India, China, and South Africa, are even exploring their own currency system to bypass the dollar altogether. This trend, known as de-dollarization, might seem like a distant threat, but it's gaining momentum faster than many experts anticipated. The result? A weakening dollar that could send investors flocking to silver as a safe haven. Now, let's talk about inflation. The dollar's purchasing power has been steadily eroding, making every paycheck, savings account, and retirement fund less valuable. As this trend continues, more people are waking up to the need for hard assets like silver to preserve their wealth. Unlike the dollar, silver can't be printed at will. Its scarcity and intrinsic value make it a reliable store of wealth in uncertain times. But the story doesn't end there. Technical data shows that silver is sitting on the edge of a breakout. As the dollar's strength begins to wane, we could see silver prices climb rapidly. Historically, when the dollar weakens, silver has not just kept pace, it's surged. And with the Federal Reserve signaling potential rate cuts on the horizon, the dollar's decline could accelerate, unleashing a new wave of interest in silver. The bottom line: the dollar's dominance is under siege, and silver stands ready to take center stage as a hedge against its decline. But what about the role of global tensions and geopolitical risks? How do they fuel silver's safe haven appeal? That's what we'll explore next.
Look, man, who's surprised here? Really, who is surprised at what we're seeing? I don't think anyone. We are being bridged into a new system. It's pretty obvious. This new the crypto capital thing is only a bridge system into the new system, which is coming, unfortunately. And the Federal Reserve is going to control that as well. And so that's where we're going. Unfortunately, look, man, but this is opportunity as well. People need to look. This is no surprise to anyone that follows our work. We're being systematically wiped out. We're being destroyed in support of the 1% and 2%ers, the central bank system here. And that's who we got, unfortunately. People think they got something different, but they didn't. They were just a lie and deception. And as this, what else would you expect in this environment? But clearly that's what's going on. And there's opportunity here across the board, more so, I think, than we've ever seen. You can look at everything from two perspectives. It's bad, but there's out of bad things can come something good. And I think that's really what we got to focus on here. Look, man, we're all in the same boat. We realize here that the central banking system, and in this case, the Fed, is going to be made much stronger moving forward. We got to take the opposite side of that trade here, man. We got to understand, first of all, we need to be in this market. I know a lot of people are still calling for market crashes. It's not going to happen. We're going to see artificially suppressed rates for as far as the eye can see, and then some. We're going to see more currency devaluation on an epic scale globally, not just here in the United States, as central banks continue to fulfill their goal to issue in a new system. And I really believe that's why Trump was selected to bridge the system into the new tokenized system, the crypto capital of the world, not the constitutional money capital of the world, forcing the world, it's just a joke. Imagine if you are the leader of a nation, you're told you better use Federal Reserve notes or else. You got to be kidding me, man. If that doesn't reveal a weak hand. Look, I was a poker player for many years. I played semi-professional for years. And I know a weak hand when I see one. And threats are always come from a position.
If there's one thing history has taught us, it's that geopolitical turmoil can shake financial markets to their core. And when the world feels like it's teetering on the edge, silver often emerges as a good safe haven. But why is that? and what's happening now that could make silver even more essential during these turbulent times. Let's start with the ongoing conflict between Russia and Ukraine. This war isn't just a regional issue. It's a flashpoint that's disrupting global trade, energy supplies, and financial stability. As Western nations impose sanctions on Russia and align against its actions, other global players like China and India are positioning themselves differently. These tensions have created a fractured global landscape, increasing the risk of economic instability. In times like these, silver becomes a hedge against uncertainty, a tangible asset that investors can trust when other markets falter. But the conflict doesn't exist in isolation. The U.S.-China trade war has been simmering for years, and it's not showing any signs of cooling down. With tariffs, sanctions, and restrictions on technology sharing escalating, the global economic system is under stress. This trade war has driven many nations to explore alternatives to the U.S. dollar, and as we discussed earlier, silver often benefits from this shift. Geopolitical risks aren't just theoretical. They're actively shaping the demand for safe haven assets like silver. Now consider the Middle East, where tensions are always high. Ongoing conflicts, power struggles, and shifting alliances keep this region at the center of geopolitical risk. Recently, silver demand has surged as these tensions flare up. Why? Because when investors lose faith in paper assets or traditional financial systems, they turn to hard assets like silver and gold. Let's not forget about the BRICS nations. This alliance of emerging economies is actively working to challenge the dominance of the U.S. dollar. Their exploration of alternative trade systems and currencies is a direct response to the weaponization of the dollar in geopolitical conflicts. As these nations diversify their reserves, they're turning to tangible assets, including silver, to hedge against potential financial disruptions. But geopolitical risks don't just drive up demand. They also create supply challenges. For example, silver mining often occurs in politically unstable regions. Supply disruptions, whether due to sanctions, conflicts, or trade restrictions, can tighten the silver market and push prices higher. And here's a fact you might not know. Silver's appeal as a hedge isn't just for governments or big institutions. Everyday investors are waking up to its potential, spurred by these same geopolitical tensions. The more uncertain the world becomes, the more people are drawn to the stability that silver offers. So, how does this growing demand intersect with the exploding need for silver in technology and green energy? That's exactly where we're heading next.
Always the debt market. It's the only thing I look at. The debt market dictates where I'm going to put money, my cash to work in this market. It's all that I'm looking at. It's all that the world, every investor is looking at right now because it's the key. It's the one singular key to everything that's happening here. When you have this mechanism, again, of artificially suppressed rates, currency devaluation, you know where cash is going to move in the market. It's too simple. It's too easy. The only thing I look for here, and it's going to happen, is going to be an uncontrolled sell-off in the debt market. We got quite a sell-off in the debt market as of late. We had the 10-year yield almost par with the federal funds rate, which was something I was looking for. I kept talking about it. I kept saying that if we get par, 10-year yield, federal funds rate, the market's not going to like it. We almost got there. Then a miracle happened. All of a sudden, it starts dropping, man. You can't make that up. You can't make it up. So this just happened. We get almost par, almost, and then all of a sudden, yeah, down. No, obviously there's intervention here. We know who's intervening here. It's quite obvious. No investor is going to be buying debt or in this environment where the market keeps doing nothing but go higher. Looking at even the crypto space here as well. So people, it's just too simple to look at the dynamics in play and let the dynamics, in this case, the number one is the debt market here. Henceforth, why I created the MMRI, I created it for myself, the Mannarino Market Risk Indicator. I said, how can I best gauge what's happening in the debt market here? And then when I said, wow, this is a pretty cool tool, what did I do with it? I offered it for free. I want people, knowledge is power. I want everybody to win, everybody. So Why not release this to the public? There's no sign-ups. It's right on my website.
Let's shift gears and talk about something you might not immediately connect to silver: technology. Silver isn't just a shiny metal sitting in vaults or coins. It's a critical component in the devices and infrastructure that power our modern world. From the smartphone in your hand to the solar panels on rooftops, silver plays a pivotal role. And here's the kicker: this demand is skyrocketing. Why is silver so important in technology? It's because of its unique properties. Silver is the most conductive metal on Earth, making it irreplaceable in electronics. Every smartphone, laptop, and flat-screen TV you see today contains silver. But it doesn't stop there. Silver is also a key ingredient in the green energy revolution. Solar panels, for instance, rely heavily on silver for their photovoltaic cells, the components that convert sunlight into electricity. As nations ramp up their renewable energy efforts to combat climate change, the demand for silver in solar technology alone is set to soar. Now, here's where things get interesting. The world is also grappling with the growing mountain of electronic waste, or e-waste. Every time you upgrade your phone, tablet, or TV, the old one often ends up discarded. This e-waste contains valuable metals, including silver, that can be recovered and reused. In fact, the Royal Mint in the UK has pioneered a groundbreaking process to extract silver and gold from e-waste, recovering enough precious metals to manufacture millions of new devices annually. This recycling innovation could help address supply shortages while reducing environmental damage from mining. But even with recycling efforts, the supply of silver may struggle to keep up with demand. That's because silver isn't just being used in technology. It's also critical for electric vehicles, 5G networks, and medical devices. Each of these sectors is expanding rapidly, creating a perfect storm of rising demand against constrained supply. This isn't just a theoretical issue. It's already happening. Major governments, including the U.S., have flagged silver as a critical mineral for national security, and they're keeping a close eye on its availability. In the past, supply shortages have caused silver prices to spike, and with demand only set to grow, history could repeat itself. So, how does all of this tie back to your investments? Think of it this way. While silver is a hedge against financial instability, it's also a bet on the future. The more reliant we become on technology and green energy, the more indispensable silver becomes. And when you combine this with the geopolitical risks we just discussed, you start to see why silver might not just be a good investment. It could be essential. But what do the markets say about all this? How are traders and analysts positioning themselves in this evolving silver landscape? Let's break down the latest market trends and technical data in the next section.
Yes, I still believe the stock market is going much higher, despite the fact that it has no bearing on reality. But what would you expect to see in this kind of an environment? We don't even get drops in this market or corrections or anything else anymore. It's just up, 52 record highs for the S&P 500. So far this year, it's basically one per week, more so than that. And I believe we're probably going to get more records before this month too. And it just means, again, that, look, we got to play the game. The game is too simple right now, and that's a problem. And I've been telling people this. It's too easy right now to understand where cash is being pushed into this market. No one that follows my work understands that we've been dead on with regard to the market, with regard to the crypto space, and even with regard to commodities. Look, we hold commodities not because we're expecting to go up tomorrow, as a hedge against a warped system. The system is warped. I don't know another way to put it. It's just not connected to anything real, and commodities are real. It's all in fantasy land here. It's not on the elemental chart. But this is going to turn. Eventually, a debt market meltdown is going to occur at a time of their choosing, not at a time of ours. And by watching action in the debt market, looking at the benchmark, the U.S. 10-year yield, we can gain a lot of information here. I intend to keep myself long the stock market, buying cryptocurrencies, adding to my positions here with regard to commodities, which I haven't in a long time. But I built on my position in commodities it was the first thing I ever did was to build up my positions in commodities here. So I have not added to those positions in a very, very long time. I'm kind of riding. I'm not saying I won't add moving forward, but I work on, I build my positions like very methodically. For example, build up my positions here as I was in the market, of course, at the same time, but pulling profits from the market and putting that into building up a position in commodities. Now I'm kind of just riding the market. I would make a profit in the market. I'd pull it out. I would buy silver, gold, mostly silver, platinum, palladium as well. Now, I don't do that anymore. I built a position in JEPI, which is the ticker symbol. I built a pretty large position. Now I'm building up JEPQ. So I like to build this, move on to this, move on to that. So with regard to commodities, I think people right now is a golden opportunity. No pun intended, but it's really the truth. So just realize what's going on. And then instead of, being fearful, there's no fear here. You can't be paralyzed. You have to take action. And it's too simple, in my opinion, right now, for people to make the system work for them and not against them.
Now that we've explored silver's critical role in technology and its increasing demand, let's turn our attention to what the market is telling us right now. The silver market is sending mixed signals, but beneath the surface lies an undeniable setup for a potential breakout. Let's dissect the trends, technical indicators, and what traders are watching closely. First, silver's price movements have been dominated by a well-defined downward channel in recent months. This has kept the metal under pressure, with resistance levels around $30.91 and key support at $30.03. But here's the thing. The RSI Relative Strength Index shows neutral momentum at 52.4, meaning silver isn't overbought or oversold. It's primed for a decisive move in either direction. The question is, which way will it go? One critical factor to watch is silver's behavior around its 50-day and 200-day moving averages. These averages serve as dynamic markers for resistance and support, and right now the 50-day EMA is acting as a ceiling for upward momentum. However, any sustained break above this level could unleash significant bullish momentum as it signals a trend reversal. On the flip side, a breach of key support levels could trigger further declines. For traders, this makes silver's current position a high-stakes game of breakout or breakdown. But technicals aren't the only story. Let's look at the broader market forces. Falling 10-year Treasury yields and speculation about upcoming Federal Reserve rate cuts are bolstering silver's safe haven appeal. When Treasury yields drop, non-yielding assets like silver become more attractive to investors looking for stability. And the CME Group's Fed Watch tool indicating a 75% probability of a 0.25% rate cut later this month, the odds of silver gaining support are only increasing. Geopolitical tensions and a weakening dollar are further fueling silver's prospects. As we discussed earlier, the BRICS nations push toward de-dollarization and the rise of alternative trading systems are creating a wave of demand for tangible, universally trusted assets like silver. Combine this with ongoing global conflicts, and silver's reputation as a hedge against chaos is solidifying. Let's also consider the speculative sentiment. Traders are closely watching for a breakout above $30.87, which could ignite a rally toward $31.16 or even $31.48. If this happens, it would signal a shift in momentum and attract more buyers into the market. But silver isn't just about short-term gains. It's about long-term value. Remember, silver has historically outperformed during periods of economic turmoil, and the current setup feels eerily similar to those past events. Finally, let's talk supply. As industrial demand surges and geopolitical risks threaten mining operations, silver's availability could tighten further. When supply constricts while demand grows, prices don't just rise, they explode. So what does all this mean for you as an investor? The technical and market indicators suggest we're on the edge of a potential silver surge, driven by a perfect storm of economic, geopolitical, and industrial factors. But there's an even bigger picture to consider. the global financial system's shifting dynamics. And that's where the BRICS nations and their de-dollarization strategy come into play. Let's dive deeper into this game-changing trend next.
The distortions in price action across the spectrum of asset classes is going, and I've been warning and telling people this for many, many years. It's going to get even worse moving forward here. The mechanism of, again, artificially suppressed rates, currency devaluation, all it does is open up a doorway for cash to make its way into risk assets. In this case, we're talking about the stock market here. And of course, this vaulting higher of cryptocurrencies as the United States has transitioned into a blockchain system, obviously not a constitutional money system, is pushing cash into the crypto space. So understanding the environment is risk on. And again, look, I am not saying that this market is not. This market is so detached from any kind of reality. Again, the multiples that the market is trading on, we've never seen before. And that doesn't mean it's going to stop. I think the mechanism here of artificially suppressed rates of currency devaluation is going to push more cash into risk assets or the stock market and, of course, into cryptocurrencies as well. And that means that cash is coming out of things or is not going into as much into, let's say, commodities, because these are risk-off assets. So, and I even just this morning, I got questions about this. Hey, Greg, what's happening to commodities? Why are gold and silver underperforming? It's too simple to understand. Cash does move through these markets in predictable patterns. The environment being risk on here, the corporate agenda, the cutting of corporate taxes here, the pushing up of wealth to the 1% and 2%, this is going to accelerate moving forward over the next few years here. And that wealth is stolen. It's grand theft from the people down here getting shoved right up to the 1% and 2%ers. They're the ones that own most of the market. They're the ones that own most of the crypto space. And again, this is opportunity in understanding that commodities, because they are real things. The higher the market goes, the stock market goes, the more on sale commodities are going to be relative to other things. So again, global, if anyone is having a fantasy that they're all of a sudden going to see global debt start to contract in any way, or currency devaluation on the back of that, is completely duped into something that just isn't true. The mechanism is going to be much greater moving forward until it is, we're being pushed off of a financial and economic cliff. And unfortunately, this is going to end up very badly, very, very badly for most people. And this is, but people can get themselves in the right spot of this. Yes, I am still long this market, buying the market.
Now, let's zoom out and look at the global chessboard. The BRICS nations, Brazil, Russia, India, China, and South Africa, along with their new members like Saudi Arabia and the UAE, are making waves by openly challenging the US dollar's dominance. This trend, known as de-dollarization, is about more than just geopolitics. It's a potential game changer for silver. Here's why. First, let's talk about the why behind de-dollarization. For decades, the US dollar has been the backbone of global trade. But as countries face increasing financial sanctions tied to the dollar, think Russia during the Ukraine conflict, they're looking for alternatives. BRICS is spearheading efforts to create payment systems and trade mechanisms that bypass the dollar entirely. This isn't just talk. It's already happening. Nations within BRICS are exploring using their own currencies, barter systems, and even commodities like gold and silver for trade. Now, where does silver fit into all this? In a world where trust in fiat currencies is eroding, tangible assets are becoming the new currency of choice. Gold has historically been the star of this show, but silver is increasingly joining the spotlight. Its affordability, coupled with its industrial utility, makes it a more versatile option for nations looking to diversify their reserves. Russia and China, for instance, have been quietly stockpiling precious metals as part of their broader strategy to insulate themselves from dollar dependency. Let's not forget the broader economic implications. If BRICS succeeds in reducing dollar reliance, it could trigger a cascade effect, weakening the dollar's value and causing a flight to safe haven assets like silver. This isn't just theoretical. We've already seen hints of this as nations accelerate their purchases of silver and gold while trimming their U.S. Treasury holdings. The less dependent the world becomes on the dollar, the more demand we're likely to see for silver. But the implications go even further. The very act of de-dollarization introduces a new layer of financial instability into the global economy. As nations experiment with alternative systems, the potential for missteps or market disruptions grows. For investors, this uncertainty makes hard assets like silver even more attractive. Unlike fiat currencies, silver doesn't rely on a central authority or system to maintain its value. It's a physical, universally recognized asset that transcends borders and politics. Here's an interesting twist. The push for de-dollarization isn't just about resisting the U.S. It's also about hedging against future economic shocks. The BRICS nations, with their diverse economies, recognize that the next big crisis could come from anywhere. By holding assets like silver, they're building a buffer against the unknown. But what does this mean for you as an individual investor? It's simple. The global shift away from the dollar is creating a unique opportunity for silver to shine. As demand for this metal increases on a geopolitical scale, prices could rise dramatically, and those holding silver today might find themselves ahead of the curve. So, as the BRICS nations continue their financial revolution, how does the Federal Reserve's policy tie into silver's trajectory? Let's explore the critical connection next.
I think people that follow our work realize, at least, people that follow my work, I get a lot of pushback. Oh, Greg, you're wrong telling people to stay long the stock market. Greg, you're wrong about telling people to buy cryptocurrency. I've been hearing this for 10 years, or a very, very long time. And, I pretty much think I got it right. But there's going to be a moment to get out. And the moment to get out is going to be dictated to me when I see, let's say, the MMRI spike in an uncontrolled fashion. Well, this is going to be off the charts at one point, literally, deep into the red zone. Red zone is at MMRI 300. And I wouldn't be surprised to see MMRI 500 when we get a meltdown in the debt market. And that's going to, again, but what's really going to happen, it's not about the stock market. People got to stop looking at this stuff. Well, we're in a liquidity crisis right now. And the only way to keep the charade going is to keep pumping more debt into the system. That's why Trump wants people to stay in the dollar. The dollar is a unit of debt. It's not a unit of wealth. Okay, world, accept more of the Federal Reserve's debt coupons, because that's all they are, which of course makes the Fed stronger, not weaker. And the world is laughing. The world doesn't want anything to do with it anymore. That's why the BRICS alliance was made, because of, or is now being built on the back of this world dollar de-dollarization. I mean, this has been going on for quite a long time. It's too easy, man. It's too easy to see what's happening. But I don't want people, like I said, we don't have to guess. We just keep our eyes on certain dynamics in the market, and we're going to know when to get out of here. I promised all the people that follow my work that I will keep them ahead of the curve to the best of my ability. And I think that I have outperformed that promise to people, and I will still keep that, because this system has been weaponized against all of us, and we're losing. We are losing. But people that get it, we can't be beaten. It's too simple. We have their playbook. You and me and the people that follow our work, bro, they have the playbook. We know what's going on here, and it makes it very easy for us to understand what we need to do about it.
Let's bring the focus back to the United States, where the Federal Reserve's actions have always been a powerful driver of financial markets, and silver is no exception. Right now, all eyes are on the Fed, as speculation about rate cuts builds. But what does this mean for silver, and why could it mark the beginning of a price surge? Here's the deal. Silver thrives when interest rates fall. Why? Because falling rates make non-yielding assets like silver more attractive. Investors aren't getting much return from bonds or savings accounts in a low-rate environment, so they turn to tangible assets to preserve and grow their wealth. And with the CME Group's Fed Watch tool indicating a strong probability of a rate cut in the coming months, silver could be gearing up for a bullish run. Now, let's dive into the bigger picture. After years of aggressively raising rates to combat inflation, the Fed is starting to face the consequences of its tightening policy. Higher rates have put enormous pressure on the economy, raising borrowing costs and slowing growth. The Fed knows that keeping rates too high for too long could tip the U.S. into a recession, a scenario that would send shockwaves across global markets. This is where silver comes into play. Historically, during periods of Fed easing when rates are cut to stimulate the economy, silver prices have surged. Investors flock to silver as a hedge against the uncertainty that often accompanies these transitions. And let's not forget inflation. Even as the Fed fights to tame it, inflation continues to erode the value of paper money, making hard assets like silver all the more appealing. But there's more to this story. Rate cuts don't just impact silver directly, they also weaken the U.S. dollar. As the dollar loses strength, commodities priced in dollars, like silver, become cheaper for international buyers, driving up demand. This dynamic creates a perfect storm where both domestic and international forces converge to push silver prices higher. And here's an intriguing twist. Rate cuts often ignite speculation in the markets, attracting not just institutional players, but also retail investors looking for the next big opportunity. This wave of interest can amplify silver's upward momentum, creating a feedback loop of rising prices and growing demand. But the Fed's actions don't exist in a vacuum. They're happening against the backdrop of a shifting global economy, geopolitical tensions, and technological transformation, all of which we've already discussed. Silver isn't just riding one wave. It's catching multiple, interconnected trends that could propel its value to unprecedented heights. So what does this mean for you? If the Fed follows through with rate cuts, silver could see a surge in demand and price. But don't just take my word for it. Let's talk about how you can strategically position yourself to take advantage of this opportunity in the next section.
Well, the Fed here, who's buying all the debt? It's the central banks. They're the ones that are the number one buyers of debt. They're going to keep buying it until a moment. That's why, again, I keep saying, that when this comes down, what we're going to end up seeing is an uncontrolled sell-off. And I mean, not just a sell-off like we had. We're going to see 20, 30, 40. I wouldn't be surprised to see 50 basis point spikes in the 10-year yield on a daily basis when the moment actually comes here. But again, once the Fed in this case stops manipulating the debt market, we're obviously in full-blown yield curve control. The Fed has been involved in QE since June of this year. Right under everyone's nose. It wasn't announced, but it's what happened. They also got involved here with yield curve control, and the market's loving it. And that's why you're seeing what we're seeing here right now. It's a message. The Fed sends subtle messages to the market. We got your back. We got your back. Stay long the market. And that's what they're doing here. And people who can decipher the code, if you want to call it that, have obviously done very, very well. And that mechanism is going to stay in place until it isn't. And I don't want to pinpoint it when it's going to happen. I think the world, again, we're in a really bad spot here economically. The world economy is disaster area. And you got central banks inflating the global debt. It's not going to stop. Currency devaluation. It's a vicious cycle. The more they devalue the currency, the more currency they need. Because now it takes more currency to buy anything. So it fulfills their agenda to become the lenders and buyers of last resort. This is what the Fed wants. What every central bank wants to do is to have absolute control over the debt market, which is the key, yet again. And it seems like they're pretty much there already. So when is it going to end? I have no idea, bro, but I'm going to take advantage of everything I possibly can until that time. But we're hedged.
Now that we've examined the perfect storm forming around silver, the next step is understanding how to turn this knowledge into actionable investments. Silver isn't just another commodity. It's a unique opportunity, but the way you choose to invest in it can make all the difference. Let's explore how you can position yourself to capitalize on silver's potential. The simplest and most direct approach is to own physical silver. This means buying coins, bars, or rounds that you can hold in your hands. Physical silver has an unmatched appeal because it's completely independent of financial systems. It doesn't rely on third parties, banks, or governments. However, there are important considerations. Premiums, or the extra cost above the spot price, can vary significantly depending on the product. Coins like American silver eagles or Canadian silver maples are often in high demand and maintain liquidity, making them reliable options. The appeal of physical silver is clear. It's tangible, portable, and immune to systemic failures. But storage and security are factors we'll need to address, as safeguarding physical silver is part of the equation. For those who prefer a more flexible approach, silver exchange-traded funds, ETFs offer a convenient way to gain exposure to silver without the logistics of handling physical assets. These funds track the price of silver and allow you to buy and sell with the same ease as trading stocks. While ETFs simplify silver investing, they do come with caveats. Counterparty risk exists, as you're relying on the fund to hold the silver it claims to, and management fees can slightly chip away at your returns over time. Still, ETFs are an attractive option for many investors due to their liquidity and accessibility. If you're looking for more growth potential, consider investing in mining companies. Silver miners can provide leveraged exposure to the price of silver, meaning their stock prices often rise faster than the metal itself in a bull market. Established players like First Majestic Silver or Pan American Silver are often seen as safer bets, while smaller, junior mining companies carry more risk, but also the potential for higher rewards. Unlike owning silver directly, mining stocks are influenced by company performance, operational risks, and geopolitical factors, which makes thorough research essential. For the more adventurous, silver futures and options present an opportunity to speculate on price movements with significant upside potential. These financial instruments allow you to bet on where silver's price will go, but they come with considerable risk. Futures contracts are highly leveraged, meaning small market moves can lead to substantial gains or losses. This approach requires experience, caution, and the ability to navigate volatile markets effectively. Regardless of the investment method you choose, diversification is key. Silver is a powerful tool for wealth preservation and growth, but it shouldn't be your only asset. Balancing your silver exposure with other investments, like equities, gold, or even cryptocurrencies, helps mitigate risks while positioning you for a variety of economic scenarios. Timing also plays a crucial role in any investment strategy. While silver's long-term outlook is undeniably bullish, its short-term movements can be volatile. Waiting for a market dip can provide an opportunity to buy silver at a more favorable price, but the accelerating trends we've discussed make it clear that waiting too long could mean missing out. Investing in silver isn't just about hedging against uncertainty. It's about seizing a moment in time when economic shifts and industrial demand converge to create extraordinary potential. Understanding the right strategy for your situation ensures you don't just protect your wealth, but also position yourself for substantial growth. But the question remains, how do all these factors come together to create the unprecedented opportunity silver offers today? In the next and final step, we'll bring it all together and reveal why silver could redefine financial stability in the years to come.
TraderChoice.net, top of the second page. I want people to utilize that tool because, in my opinion, again, I don't get anything out of people looking at it. It's free. I want people to utilize every weapon in their disposal to turn the tables on those that are looking to destroy us. And any person trying to keep us in the dollar is obviously working for the Federal Reserve. And I'm referring specifically to Donald Trump here in this case here. Is obviously our enemy. We don't need to be the crypto capital of the world. We really need it to be. Imagine, for example, if Trump would have said, let's become the constitutional money capital of the world. Do you know what would be happening to the price action of gold and silver right now? They'd be taking off. But what would that do? That would have put a lot of pressure on the stock market. And that's not what Trump is all about. This administration that we have, and I want people to get their head around this, okay? I'm not bad-mouthing anyone. I just want people to understand the dynamics that are in play. This is the most stock market positive administration that has ever been put together, I think, in the history of the United States. And that means, again, just like last time, rah, 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 look at that stock market. It was a big, fat, ugly bubble before he took office. Remember that? Then it wasn't a bubble anymore. Then he wanted it to go up and up and up and up. And he actually said, we're all rich, not referring to you and me. He was referring to the 1% and 2% that own the market. And it's going to be the same dynamic in play now until it doesn't. But again, man, look, I don't want people to to come away from this worried or scared. People need to come away from this understanding that this is an awesome opportunity here to add to your commodity holdings here, to stay long the market if you are so inclined, to get into the crypto space. We haven't seen anything yet. I mean, I've been hearing about crypto going to zero since I don't even know when. It's not going to zero here, especially now that the United States is being vaulted to be the crypto capital of the world. We're going to lead the way, obviously, and this is what Trump has been selected to do, reaching us into the new system here, allowing this blockchain system to kind of become a worldwide phenomenon. And the BRICS are pushing back. And Trump doesn't like that. And that's why he's standing up for the Federal Reserve here in this case, saying you better stay in the dollar. And they're laughing. They're laughing. In my opinion, this is just going to hasten or speed up the free fall.
Now, let's bring it all together. We've examined the economic chaos, the geopolitical tensions, the transformative demand for silver and technology, and the market dynamics shaping its future. So why does silver stand out as the ultimate investment opportunity right now? The answer lies in the convergence of everything we've discussed, a perfect storm of factors positioning silver for unprecedented growth. First, consider the state of the global economy. Inflation continues to erode the value of fiat currencies, while central banks worldwide grapple with rising debt and slowing growth. The Federal Reserve's looming rate cuts could weaken the dollar further, amplifying silver's appeal as both a store of value and a safe haven asset. History has shown us that during times of monetary easing, silver doesn't just hold its value. It thrives, often outpacing other assets in percentage gains. Next, geopolitical instability is reshaping the global financial system. The BRICS nations and their push for de-dollarization mark a seismic shift away from U.S. financial dominance. As countries seek alternatives to the dollar, silver's affordability and universal recognition make it an attractive choice for reserve holdings and trade settlements. This trend isn't just theoretical. It's already underway, with nations stockpiling silver as part of their broader strategy to reduce reliance on the greenback. Meanwhile, the demand for silver in technology and green energy continues to rise. From the solar panels fueling the clean energy revolution to the electronics we rely on every day, silver's industrial importance has never been greater. Yet, supply constraints and geopolitical risks threaten to disrupt production, creating a potential supply crunch that could send prices soaring. Combine this with the innovative recycling efforts to recover silver from e-waste, and you have a market where demand is outstripping supply, a recipe for explosive growth. And let's not overlook the role of the individual investor. As awareness of silver's potential grows, retail investors are stepping in, driving up demand and creating a feedback loop of rising prices. This isn't just about hedge funds or governments anymore. It's about everyday people realizing the unique opportunity silver represents. What makes silver truly special, though, is its dual nature. It's not just a hedge against economic collapse. It's a bet on the future. As global uncertainty persists and technological advancements accelerate, silver is poised to be both the anchor that protects wealth and the catalyst that drives innovation. So what does this mean for you? It means silver is more than an investment. It's a strategy for navigating a world in flux. Whether you're looking to hedge against inflation, diversify your portfolio, or capitalize on emerging trends, silver offers a unique combination of stability and growth potential. But here's the catch. The window of opportunity won't stay open forever. The forces we've discussed are already in motion, and those who act now could be in a position to reap extraordinary rewards. If you've been waiting for the right moment to secure your financial future, this is it. But remember, this isn't financial advice. It's a framework for understanding why silver could play a pivotal role in the years to come. Do your research, stay informed, and consider how silver might fit into your broader investment strategy. So the question is, will you let this opportunity pass, or will you seize the chance to position yourself for what could be the investment story of a lifetime? The choice is yours.